I'm getting about $200,000 from my divorce. All of this money will be in an after-tax account, not an IRA. So I'm very tempted to just pay off my house with the money. I'm 50 years old and still have 22 years left on the mortgage. Paying it off seems appealing, but that would almost completely wipe out the account, though I'd still have my 401k with about $300,000 in it. What do you think I should do?
Well, there's a few things to calculate in there, but in general, okay, your house is an appreciating asset, right? Now, it may not go up this year in value, but your house is typically going to go up 3 to 4% a year in value consistently over time. And look, we got 150 years of data to back that up, Chip. So if your house was, say, worth $300,000 today, 20 years from now, it will be worth $600,000. You owe $200,000 on it. So that is, while I don't like debt, that's good debt. And you can write that interest off if you're itemizing on your tax return. The other thing is if you have $300,000 in your 401k, that's tax deferred. You have to pay tax on these dollars. These $200,000, you're not going to have to pay tax on this money. This is available to you. So you can invest it in a way that you could use. And right now, and I don't know what your interest rate is. It sounds like the mortgage has been in place for a while, but over 75% of all mortgages in place today have interest rates below 4%. So if your interest rate is below 4% and we can guarantee you a 4% in a CD, that's a positive arbitrage. Even if you don't want to put any risk to the money, go put it in something that'll get you 4.5% over the next couple of years. And by the way, we have like 5.1% available for 7 years. It's through what's called a MIGA, a multi-year guaranteed annuity. It's insurance company's almost version of a CD. So there are ways to guarantee returns. Now, the downside of those type of products, full disclosure here, is that you lock that money up. You can't break that like you can a CD, or you'll pay typically like a 10% surrender charge. But you can get higher interest rates guaranteed. So I would not most likely recommend paying it off. However, I paid off a mortgage I had. I think I talked about on the show earlier. We had a $90,000 mortgage. I own several rental properties. They're all debt-free, right? And it drives me nuts. I want leverage on all those properties because I want to go buy more, right, with the leverage. But my wife, as we've talked about, Melissa Matter, she hates the word debt with anything. So for Christmas, I paid off a $90,000 mortgage we had. That was at like 2.25%, even though I was earning over 4% on the cash and I had plenty of it sitting there. It killed me to do that, but happy wife, happy life, gentlemen. So guess what? For her, and because I have other liquidity,
a paid off mortgage under the tree.
So again, everything is specific to the situation, but we can help you run just the numbers, but emotion matters too. And if you can't sleep at night and you're better off with it, I get it. So, but you are the perfect person to come in for the report card where we can analyze all of this so that you can have an understanding of what you should be doing. And maybe it's a partial mix of both.